Boom, we are alive, ladies and gentlemen. Thank you for joining us today. It's a wild and wonderful world out there. You know, a lot of people are having a difficult time trying to figure out whether we're in a bull or bear market. Are we gonna go to 20 grand or are we gonna go to 100 grand first? And largely, well, we are in the middle of a market cycle and we've stood by this sentiment since around May. The risk to reward relationship is effectively equal. So the only thing I think that is worthwhile here is following a consistent strategy and plan. But what we're gonna do is we're gonna dive in and take a look at Bitcoin's price. So I'm gonna have to do this over here. Okay, boom, so on the screen, you can see Bitcoin's price. One of the things I think that's interesting here is we have flown right back down to the $40,000 region that we were looking for. And again, the reason why we were so, I guess, prudent on this happening was this large gap that you see on the right-hand side of the screen on our volume profile. One of the things that's interesting is that now that we are in such a big marketplace, effectively, as compared to where we were in 2017, where there's effectively only retail purchasers, you have a very different take in the markets right now because of the amount of capital that is moving in on a day-to-day basis. And over the last 24 hours, I've seen a lot of tweets of people like, oh, imagine MicroStrategies is buying $100 million of Bitcoin, Luna is buying hundreds of millions of dollars of Bitcoin, and the price is going down. What you have to understand is they're not buying $125 million of Bitcoin in one single buy. That would actually jet the market up dramatically. And what they do, if you go back and you listen to Michael Saylor's comments, is they basically create bots that go out through whether it's Coinbase or Binance or FTX, and they look for open spot buys, and they buy very small amounts constantly, every 5, every 10 minutes, aiming for this point of control, usually, which is around the $38,000 mark. Now we dropped into the $39,000 area, which is, again, we've been expecting this since at least March 24th, so it's not unexpected. A lot of people are having unexpected moments with this. And what I want to do for you right now is line up the bullish case scenario and why I am bullish. So what I'm going to do is I'm just going to check in on the stream to make sure everything is going smoothly. I know we have I've had difficulties every now and then with the live stream while I'm traveling, so I want to make sure that everything is going smoothly, and it appears to be, it appears to be going smoothly, which is a good thing, so we're going to leave it at that. And I'm going to have to just click on these buttons today because that's all I got. Okay, so what's exciting about this? Well, to me, what we want to do is keep a close eye on something called three peaks, there's 3 peaks, and the domed house. Now, we've talked about this a bunch. A lot of people on YouTube have gone over it. The thing that they missed is probably the most important part about this particular charting pattern is that this is actually a bearish reversal pattern. That it means it's bearish in the beginning, but then it reverses dramatically. And we've actually seen this pattern take place many, many times. So again, we've gone over this before. In gold is the Bitcoin chart above, and down below is the S&P 500. Again, you have 3 peaks and a domed house. Actually, this was more of a domed house followed by 3 peaks, and they're basically inverses of each other. If you go and do the research on the internet, which we'll go over in today's video as well, you will find out that these are interchangeable, basically. You can have 3 peaks and a domed house, or a domed house and 3 peaks. They're effectively the same chart, and they are bullish patterns. But bearish reversal patterns would be another way to say it. So as you can see here, the S&P 500, once it completed this bearish reversal pattern, it went up and only went up for multiple years afterwards. And this is what I suspect we're going to see with Bitcoin. So let's get a little bit deeper into this. So here's the 3 peaks in the domed house. Now, the domed house ends at 0.28. So if we look a little further back here, effectively 0.10 right here, the lowest point, which is around $29,000, is 0.10. So this is position number 10. If we go back to our dome chart, we go up, we see the sideways up. Okay, so we go up, sideways up, and then we drop back down pretty dramatically through points 26, 27. And then we hit this bottom here at around 0.28 right here. So it only becomes apparent really when you're using the candlesticks, when you see that we wick down to $32,000, again, effectively 0.10. What you need to remember is that 0.10 here is an area. It's not an exact wick or volume bar of a candle. It is an area here that we're looking for. And largely speaking, this area, 0.10 was anywhere between 33 and $38,000. And we actually filled that beautifully. So what do we get next? This is a reversal pattern. So let's take a look at where this has happened before. So we shared this back a while ago. Matthew Hyland pointed this out. This was the NASDAQ, 1997 through 1990 on the left-hand side. 3 peaks, domed house. Again, what we're charting here is the 3 peaks and a domed house scenario. So again, 3 peaks, domed house, 3 peaks, domed house, 3 peaks, domed house. Okay, across the board, this is actually very easy to recognize, and fantastically enough, the NASDAQ, it continued to go up much, much higher afterwards. This was back here in 1998. If you look at the NASDAQ today, it's basically an order of magnitude higher almost. I think it's almost a 5x. We'd have to go back and double check exactly. But again, 3 peaks, domed house for Bitcoin between 2020 as well. And this is what we've been watching. This is effectively the 3 peaks followed by a domed house. And once you get to point 28, which we have already completed, we continue onwards and upwards with extraordinarily bullish momentum. Now, a lot of people right now, I watched a video by CryptoFace. I don't know why anyone would watch that, in case you happen to be a fan of it. I just heard a bunch of talking with no real conclusion. It was basically like, it could go up, it could go down. Let me look at like 15 different time charts. I'm gonna look at the 1 hour, I'm gonna look at the 4 hour, I'm gonna look at the 6 hour, the 3 day. If you need that much data to give you a clear decision on what you're doing, you probably are not doing it properly, at least in my opinion. I'm not a day trader. I'm a long-term investor. I've played around with day trading. Although you can be successful, it's usually not not too sustainable. It's much easier to make, like again, if you go to Forbes top 100 list, you don't see day trader anywhere in the top 100. You see entrepreneur and private equity, or early venture capital effectively is what private equity is. We're looking for long-term outlooks. Even though we've seen companies like OpenSea go from basically $0 to $1 billion or 0 to unicorn almost overnight, being patient for understanding the story is extremely important. Whether you're getting into the market or out of the market, if you're doing that within a few days, you're probably going to underperform what I do just by buying and sitting, right? You make, I made $250,000 from a trade. It's like, okay, how much did that cost you to get there? A good entry into Matic 2 years ago at $1,000 is worth almost $250,000, saying you had to do nothing for it. I'm more interested in what's going to bring me the most amount of return for the least amount of effort. And day trading does not fit in that category. And again, every now and then I'll play around with leverage because I'm bored, but I do not ever suggest it to anyone as basically a surefire way to lose money. But I watched this video, he talked for 30 minutes and in no way came to a conclusion. He just said, the risk to reward relationship is equal. We've said that the entire time. We know that we're halfway through a bull market. So the risk to reward relationship is basically equal. We have an equal chance of going to 100,000 as we do basically going down to 20. I'm here to tell you that I believe the chance of going down to $20 basically is non-existent. In my opinion, I believe we've hit the bottom of 0.28 and that we are now reversing into what will be the longest extended Bitcoin bull market. When a lot of people are calling for some super cycle, I think we're going to get that next, where we just see such a focused demand over the ability for supply to be created that the price just effectively goes up. And here are all these leading indicators. I also wanted to share this from Rafa, one of our private members. We talk about scale and variance frequently. One of the things I think that's important is understanding that the term scale and variance means that, hey, if you're doing charting, this can come up and out of almost anywhere. And one of the things we had mentioned was that we believe we're in a mid-range accumulation. Now here, Rafa has actually used the reaccumulation schematic 3 as a reference point with this continuation of the bull market. And largely I agree. The only thing I would disagree here with is that drop down to $23,000. I just think there's too much accumulation going on for that to really take place. Now we could be wrong, right? I could be talking out of my ass and my confidence here is justly undue. Ray Dalio was famously super bearish back in, I think it was 1980s, and he went short right before the longest extended bull market in history. And I believe that's where we are right now. A lot of people are bearish when we're probably right at the bottom of the next largest run Bitcoin has ever seen. And this is another leading indicator for that as well. So here's something else that BTC Fuel had shared. Again, this is the end part of the domed house. before you see points 10 and the continual breakout. Now again, they're comparing it with Justin Mammy's sentiment cycle. I don't know where either of these people came from, but if you, this particular chart, the three peaks in the domed house was originally figured out by what was his name? George Lindsay, publication in 1971. This has been around for a long time, and you can find this chart pattern in so many different places. It is one of these natural developments of human consciousness, it appears. So here we go again, the three peaks in the domed house, or the domed house and the three peak. Here's another version where the Dow Jones Industrial Average, it took place. Again, if you look at these years here, we're back here in 1998. It went, 1938 to 1940. Again, it's massively up since then. So I believe what we're witnessing is probably the biggest market cycle turnaround that Bitcoin has ever experienced. Now, just to be a little bit more on the contrarian side, if we do look closer, we're getting this sell signal. So this purple bar that started to show up here is showing a significant amount of supply coming into the market, which is what we wanted. We want the market to test this particular range that we've been guiding in here. Again, on the on the daily, a little bit more close up, you can see this VPVR area again that we're so interested in filling. Once we do this, I think we're going to fill like this one more time, and then we're going to shoot straight up pretty much. And we're going to go up, not like this, we're going to go up and up dramatically for probably the next 3 to 5 years as people start to understand that you cannot trust your governments, you cannot trust your banks, because they're not acting in the interest of the people, they're acting in the interest of themselves, which is actually normal behavior for any organization or person, is not to act in the interest of someone else, but in the interest of themselves. Unless maybe it's your child and there's drastically different instincts with your ability to want to save your child from something ridiculous, like running in front of a train. Chances are you'd run in front of the train too to grab your child. But CNN anchor's Brian Stelter is definitely not going to be running in a train for you. He's actually going to be running away from the train for his own selfish ass. So I would assume that the most of the market is looking at it like this. They are in a selfish echo chamber, effectively. And this does not in any way look bearish to me. I wouldn't even contemplate a bearish scenario here because of how many indicators we have right now going, okay, let's just look at what's happened in analog in the past. Oh, three peaks, domed house, massive bull run after. Dow Industrial owned 1930 to 1940, massive bull market that followed afterwards. NASDAQ 1997 to 1999, massive bull market that followed afterwards. So this to me is pretty much a confirmation. Now, again, I'm going out of my way to be extraordinarily confident in something I probably shouldn't be confident about, which is where are we in the price cycle? One of the reasons why we always suggest a consistent strategy is because becoming overconfident can be a difficult one. Let's say Bitcoin comes down to $20,000 and we were wrong. This is not a bearish reversal pattern like I've been so cockily confident about, and it just comes down. Well then, how are you positioned? And one of the things we always try to highlight in all of our investment thesis is that you should never be risking more than you are willing to lose. And this is most greatly summarized in the quote, heads I win, tails I only lose a little. If you follow a budget strategy to investing, you're going to win every time because you're not risking anything effectively. Let's say in Costa Rica here, my internet bill costs like $200 a month because I live in the middle of nowhere and I had to get a fiber line run out to the middle of nowhere and basically back paying for that 100 megabits a second. But because of that development and that infrastructure, that time that it takes to get everything set up, what we're looking at is often our own biased opinion, right? Like, I want the market to go up, so I'm going to look for all the indicators. And really, I've been a contrarian my whole life. I've been in a fringe the majority of the time. And right now, most people are bearish. Most people have been bearish about Bitcoin since way back here. I've held the exact same narrative, which is that we are in an accumulation channel. So if I know that I'm spending, like, let's say $200 to $300 a month on my internet, I should easily be putting the $200 to $300 in every month as an investment that's basically just throwaway money. I never get any of the money back from my internet. All I get was the internet, right? That's like the investment I made for that $200 for that month. Now, I'm not trying to like sell my internet on the downstroke or anything either, right? So it's a little bit different theory. Budgeting your investment thesis like a bill is probably one of the easiest ways to go. And when you see monumental potential which like we saw back here when Bitcoin was around 9 grand, then you go all in, throw the kitchen sink in the house at the damn thing if you're in a place to do that. Back here when Bitcoin was around 9 grand and we saw our first reaccumulation pattern, this first horizontal reaccumulation, you can go back, you can watch all of our videos about this area. We were hyper bullish about all of this, both of these steps. This is the moment to be like super excited, right? But when we're in the middle of a bull market reaccumulation cycle, because the risk to reward is so high, the only profitable trading or investing mechanism, in my opinion, is investing like it's part of your monthly budget. Now again, I'm not a day trader. I don't recommend anyone day trade. If you're playing with leverage, chances are you're going to lose, you're going to get burned, and you may not even come back because of that. Now, if you have a significant sum of capital, you can play around. It's actually pretty easy to make it look like you make a bunch of money to some degree or another. Like opening trades in certain areas is actually a really smart way to go. We had opened a few leveraged 10x positions in Ethereum way back here because there's just so much room for upside and the downside was so limited. But here, because of this, again, my cocky confidence is maybe not even justly due. I'm basing this off of previous experience and almost a decade in this market now, and studying as well. I've spent many, many years studying technical analysis and understanding some of the mathematics and human philosophy or human nature that goes into why these things happen. So ultimately, I believe that we are at the bottom. We're probably going to see a little bit of we could see a back test as low as $36,000, maybe even $31,000 on some crazy wick here. I'm not going to bet against that yet because again, 0.10 does have us coming down to this $29,000 to $33,000 area. Why wouldn't we test it again? But ultimately, I don't think that we're going to get that. I think we're going to turn around here within the next probably 5 to 7 days. We're going to get something like this, and then we're going to jump back above 50, and then we're going to be onwards and upwards for a bull market for probably many years to come. So anyways, that's my thoughts and sentiments so far today. I'm going to make sure everything is rolling smoothly. Hi, Tio. 6 months ago, you had an opinion that the bull market is almost finished time-wise. No, 6 months ago, what I said is that the first part of this bull market cycle is finished. So if you go back and you listen carefully, I'll show it because I still have it drawn up here on one of my other Bitcoin charts. Let's see which one I had it drawn up on here. BTC, there it is. Okay, so this is a chart that we've effectively had drawn up since the beginning of the bull market back in March of 2020, when the pandemic was first declared, is when the bull market started. What I'm talking about wasn't the bull market being finished, it's the first cycle. So we've gone over this a few times. Here's your idealized version of a bull market, right? Accumulation, up, and distribution. Pretty simple, but that's never how anything works. What we believe is that more often than not, what you see is an accumulation range followed by a mid-range reaccumulation and then your final distribution, and then a reaccumulation happens again, goes up, see a mid-range accumulation, then we go up. So effectively, this area here, the first part of the bull market is over. We saw that already. The first part of the bull market is over. We went from 10 grand to 60 grand. That's a huge win for us. We took part of our profits, mostly for business aspects here, back around 58,000. 44,000 effectively, 44 to 58 was a few day period. And we haven't changed that, that thesis so far because again, this idealized version of accumulation and distribution is just that, it's idealized. Here it's again much more likely that we're done the first part of the bull market into the reaccumulation cycle before the final bull market starts to come in. So one of the things in the previous videos was not about the bull market ending, Henry, was about the risk to reward relationship in this mid-range effectively being equal, so that you should take a cautious approach to any investing style, which would effectively be what we've talked about here, which is a lot of people call it dollar cost averaging. I think you should look at it more as a budget to what you normally spend on whether it's an internet bill or whatever you could afford to fit in your revenue basis. So do a monthly budget. We highly suggest understanding what you make every month and then how much you're spending. Super important to know that as well. Yeah, so I don't think the bull market is done. I think the first half of the bull market is over. We hit that at around 60 grand, and now we've been in a reaccumulation cycle, which is the mid-range of that market cycle. Andreas says, international problems worry you for a big crash to come? Great question. Yes. The simple answer is yes. Anytime people become fearful, you can see a dramatic drop in price. But a lot of the players we have in this market now are not retails or individuals. They're people that do not mind sitting on an asset regardless of the price. And if Bitcoin were to come down to 20 grand, I cannot in any way, shape, or form dream how it would last longer than a few days or a few weeks down there. There is so much buying power here. It's very likely it's going to keep the market floating. So even though a large amount of fear will do anything to any markets, and there is some correlation to all markets, because all people's correlation to the market is how fucking scared they are or how greedy they are effectively as well. So because there's any potential for some dramatic fear to come flying out of the deep, dark, interstellar corners of the universe and smashing into our planet, we can't take off the table that there could be dramatic price reductions, but I feel very strongly that it would not last very long. And if you start to see a real economic collapse or crisis, Bitcoin has actually done very well in that moment. It just depends on where the crisis is taking place. So we're going to look at the dollar a little bit for that as well. You don't see a bull market? Yeah, we're still in a bull market. That's what I was just saying. Acros has just discovered your channel. Best analysis I've seen for now. Thank you. I appreciate that. Boss Event says, yes, Acro, he's a hidden gem. I appreciate that. You guys are very kind. Maybe it's a government lab-made bull or bear hybrid. I like that. Awesome. Thank you for your brilliant analysis, says Brandon Round. My pleasure. I love sharing. Tira, is there any way that you can think of that you could go get more subs or views people should know about you? I bet you I could start a new channel and probably get more subscribers and viewers. I think we did some things back in the day, said too many words that YouTube doesn't like. I know we broke with their community guidelines on like medical misinformation an enormous amount of times here just by like speaking loosely, especially in the early days. Like I was a fan of ivermectin in March. I was a fan of hydroxychloroquine before anyone talked about it back in March. Before there was even a pandemic declared, there was like ample evidence that these things work. Like you can go onto nih.gov now and still find all those studies. So yeah, I suspect that I actually triggered something. Now, I know that sounds like a conspiracy theorist of mine, but there are some noticeable dates and drops in views and subscribership, and I get often all the time people that subscribe to the channel, they come back, they're no longer subscribed. I don't know where that comes from. I am not unsubscribing to anybody, so I bet you we could start a new channel and probably grow it quicker than the one we've already grown, because I think we hit a few triggers of like the no button on YouTube's community guidelines. Anyways, I also swear a whole lot, which is probably another check mark off. Brian Pearson says, how do you view the relationship between Bitcoin to the bond yields? I think right now you're seeing a lot of correlation because people view every asset class effectively the same. When you get into a moment of fear, pretty much everything goes down, not because the value of those things has changed, but because the irrationality of the people who hold those assets has changed. And most of the time when we're looking at these kind of weird switches in price, especially when it's dramatic, like a negative $120 fucking barrel of oil at the beginning of the pandemic, it is because of irrationality in human nature. It has really little to do with the market itself and everything to do with human psychology. So the relationship between these things is much more based off human nature and human psychology than it is between like any corollary event within the market itself, in my opinion. Dave Thomas says, international problems are compounding fears like no time in history. I wouldn't necessarily say that's true. What I would put to fire here is that the media is able to express the compounding fears like no time in history. And really, this is like any other time in history. And the prevalence of the thing that is fearful is at a much higher degree because everybody can just flick on their TV and some bad shit is happening. So I don't think that there's a higher level of fear here than any other time in history. I just believe that it is more readily shouted from these corroded soapboxes. KP Munch says, the only counter argument I would make is that a few assets are battling against corrupt governments require conspiring against it. Yes, it's a great point. For instance, we know that silver and gold operate majorly in a derivative complex, which is why when nickel all of a sudden started to break away from its, let's say its when nickel went to like $100,000, not because nickel is worth $100,000, but because the spot market of how much nickel there actually is versus the futures market, which is buying and selling these derivatives, is vastly are totally disconnected. We've seen this in multiple areas as well. So I wouldn't suspect that this is. I wouldn't suspect that it's any different. Effectively, that what you're watching is that the people are say we want silver and nickel to be cheaper because we want more technology to grow faster and proliferate adoption. Oh, well, how can we make that happen? Is we can open up all these shorts, and this is likely what happened to Bitcoin back in 2017 too. Is the day you saw them open up these derivative markets for shorting, people just started shorting Bitcoin because there's no other way to take advantage of some of the downside other than selling your Bitcoin. And here's this new, unique, exotic feature which allows more complex investors and traders to really manage and hedge their positions. So I suspect we're going to see a much more formidable growth in Bitcoin than something like silver because it's very difficult to manipulate the underlying supply. Now you can future short all you want, but these are derivatives markets based off perpetual futures, and the underlying asset is still held by whether it's an FTX or a Binance effectively. So I think when push comes to shove, if we see a crisis, Bitcoin's price may drop dramatically, but it will very quickly turn around and it will shine as a crisis asset, in my opinion. I do not believe it's an inflation hedge. It's a totally different type of money. It has very little to do with inflation, other than it's a net beneficiary from, if the governments just print stupid amounts of cash, it's got to go somewhere. So that kind of makes sense. Net beneficiary of money printing, but not a net beneficiary of like inflation per se. During a crisis, on the other hand, though, I think it will truly shine. Maybe time for a little music. I don't have any instruments here with me right now. We're currently in Cancun for a few days, but when we get home, we'll do a few more of our regular videos. Hazmat says, you're my #1 channels. I'm not in the bear cave. That's okay. The private bear group, again, the sickness of the early investor comes from all this over-emotional trading and lack of education and strong community. So that's what we build in the private group. A cure for that sickness is really to surround yourself with the education and the calmness of and repose of people who have been investing for decades and longer. K. Monty says, if it's freedoms you're fighting for, you should be willing to risk it all. One of the reasons why I moved to Costa Rica and have a 2-acre farm with hundreds of fruit trees is because my interest in freedom with nature was a really strong driver of my thesis. Let's see, we're going to skip a few questions here. We'll go back to the charts in a minute. Let's see, if Bitcoin drops to 20 grand, I'm selling my house, my Ford, and my wife. Yeah, there'll be a lot of buying pressure if Bitcoin drops that low. Wife changing wealth. That's funny. How do you feel about Avalanche? Huge fan of Avalanche. Also, the layer 1 conversation is not done. Ethereum, Avalanche, Near, Luna, these are all great venture investments into the future of contracts, I think. And I don't know who the leader is going to be. And it's more and more likely on a daily basis that we have multiple leaders. You know, a lot of the times your team doesn't need to be #1 for you to be like super amped on it. Like I'm sure there's a lot of people that love Miami Dolphins. I don't know if they've ever won. I'm not a football fan at all, but people will continue to revere their community regardless if it's the #1 player to begin with. So we know that community adoption is much more about philosophical and community alignment. Avalanche is still one of my favorite and one of my larger plays within the L1 ecosystem. So let's take a look at a few more of you guys' questions. We've had inflation, a war, pandemic all at once, and we still didn't drop to sub-30s. What would need to happen for 20s? An alien invasion? Yeah, as Mr. Jose Luis here says, he's an idiot. So Jose Luis, I'm sorry, that is an idiot. And yeah, we've seen a lot of the things that would normally scare people out of the market, and big players are still buying in hundreds of millions of dollars a day. So it's likely that Jose Luis is a broke person who just is going to stay poor for his life. So don't be like Jose Luis, ladies and gentlemen, and you'll probably do fine. If you take too many wives, you won't have Bitcoin. You guys are off on your own rant in the chant. The media is not bullshitting the price of meat. Okay, sure. It depends on where you live. I live here in Costa Rica, and a chunk of our daily food supply comes from our local area. I can go to local farmers markets Tuesday, Wednesday, Thursday, Friday, Saturday, and get fresh produce and fresh meat. My gardener has 36 fucking cows, 2 rivers on his property, 45 goats. So no, it depends on what world you live in. The price of aggregate commodities is really dependent on where that commodity comes from and then goes to on the net beneficiary side of things. So the price of meat is different in every country depending on where that meat came from. So and that would be an important factor to note there as well. We'll take a look at a few more of your guys' thoughts as well. Let's take a look here. Okay, you guys say, okay, crypto mojo life. I like your comment there. One of the reasons, another fun thing to living in Central America is I have freedoms. I can walk down to the store and buy whatever I would like. I think they want to lower the population. We're not even going to get into the conversations like that. But yeah, there's a reason to believe that might be a net benefit for anyone in the in those sectors. Red Robble says, thanks for your time and info to you. I'm happy to share. Supply shortages, let them eat derivatives. Yeah, we're in a really interesting time in history, that's for sure. Although I guess at any point in history, it'd be pretty easy to say that. If you were new and started today with investing, would you go in hard now or accumulate and wait for the directions? If I were brand new, I would repeat the exact same mantra I have today if I knew it. Because generally when you're new, you get it wrong. You do all the wrong things when you're new. But I would start investing consistently, and I would never sell, because the market direction over time is irrelevant. Governments have done the same thing consistently through history, no matter what. And that's really what we're betting on, is the mistakes of human nature. So it's actually pretty easy to bet on. Regulation could be a narrative to make it drop and retest to the 200 daily. Yes, again, there's always reason to believe, but you'd need some pretty harsh regulation. And we already have regulation around Bitcoin. It's a commodity in the United States. That says a lot. Whether you get an ETF around the commodity or how they deal with it or financial reporting, etc., that's all secondary distinctions. We've already made a distinction about Bitcoin and Ethereum, and those are our biggest players. So it's probably not too much that we would see that would change that effectively. It's a commodity. They're not going to be able to backstep on those. You showed me the 100 Beggars book, and I loved it. Entertaining, experimenting. Ladies and gentlemen, if you have not read the book 100 Beggars, it is amazing. I highly suggest it, or at least listen to it. It's free. You can find it for free on YouTube if you type. Grey Dog says, have you looked into Cadena? Would appreciate your opinion. Not much. We're focused entirely on play to earn. Actually, this is a good time to go over that. We've been doing a lot of research and publishing it lately. I'm not sure a lot of you guys will have gotten the chance to go look yet. But if you haven't, go to arcanebear.com over here. Type in arcanebear.com. You can find out a lot of our research into some of our favorite top tokens. Again, Avalanche and the Matic at the top. And again, remember, ladies and gentlemen, this is not rated in order of favoriteness, but it's pretty freaking close. So keep that in mind. And Solana should be actually quite a bit up higher now. It should have overtaken both Fetch and Meta, but we'll update that. And Wu Wei here is a great place where you can go see the majority of our new interest, which is all in the play to earn sector. I think that it has the possibility to proliferate into the billions of people's hands, and it's a very inspiring and motivating spot for us. So most of these are all play to earn games where most of our research and investing time is going currently. So hopefully that helps answer your question about Cadena. We don't have any research on it, so I can't say anything. One of the things I learned is not to speak about shit I'm not at least somewhat informed about. Okay, let's take a look. We'll go jump back over to YouTube here and look at a few more of your guys' thoughts. Can you quickly list the top 5 books you would recommend for investing? 100 Beggars, Dan Dow, Reminiscence of a Stock Operator, The power law. Was that 5? I think it was 5. So you said 6. I don't know. Let's wing it here. Let's go with, oh yeah, The Misbehavior of Markets by Benoit Mandelbrot. In BTC Miami event, they said Bitcoin can't go higher. Any comment on that? Price speculation is really a consequence of supply and demand. Yeah. When you start a cult, can I join, please? Yes, absolutely. I'll let you know. If you pay attention, it's always the day traders making fun of hodlers for not taking profits, yet we outperform them. Yes. Again, 100 Beggars is a great book. Day traders about taking profits don't realize that if you take a longer approach, we are constantly outperforming them by multiple orders of magnitude by just being patient. You're so blessed and privileged to be able to, we all are, to be able to partake in this financial decentralization. The fact that you can partake in like open decentralized venture capital, like buying Matic when it was at $25 million, is an opportunity that most people will never ever get the chance to rehave again. People are underestimating the potential of open decentralized venture capital and community building. We're nowhere near the top. Let's see. F1 Hump says, okay, Arcane Bear, Kevin O'Leary is his name. He said that BTC can't go higher from now on. It depends on institutions. I would have to listen to what he said and think about that because I'm not sure exactly what he said. So I can't pontificate there. Chris Scott says, inverted yield curve, record inflation, high oil prices, supply chain issues, housing bubble, currency printing last 2 months. How are you bullish? They've induced a recession. Oh, I'm bullish because Bitcoin is a crisis asset. In 2013 or 2012 to 2013, when I really understood Bitcoin, it was because of a collapse and a crisis, and Bitcoin still went up because it has utility in those moments. So yeah. We're looking for utility in crisis, and Bitcoin has a global utility in crisis that is totally disconnected from the mainstream financial system. So I'm bullish because all of those things will lead to a complete lack of trust and failure of confidence in the governments and the monies that they use to pay their minions. So yeah, we're bullish because of the collapse. Now again, could see a quick price dip, but it will not last long because where else are you going to go? What else are you going to hold on to? There's no other asset that is as global as Bitcoin. Even real estate. Well, what happens if all of a sudden that country is taken over by Idi Amin? You better get the fuck out. What are you going to take with you? Can't take my house, can't take my car, can't take my businesses. If you're lucky, you could take your wife and children and whatever fucking assets you can store in your pockets or backpack. But hey, Bitcoin and the rest of this sector, you can take with you. And that is very commonly overlooked and is worth a fuck ton more than people understand. Gunnar says, have you looked into the play to earn big time game? Yes, we like them too, but they have not fallen into our research list yet, so I can't say too much. So crypto face is nowhere near the top. I'm not sure what that means. Look, crypto face is nowhere near the top. No, you can go to the Forbes top 100 list. You can see everybody's name. Forbes top 100 list. Let's take a look. This will actually be a fun little side experiment. BTC share. Okay, the just 100. Actually, you know another way to good Forbes Midas list. Let's go with this Midas list. So for those of you that don't know, the Forbes Midas list is investors who just fucking killed it day over day, and you can find all of them. Let's see. So here you go. Not crypto face. None of these are crypto face. Not a single one of them. But what you can find is that they're usually either entrepreneurs or private equity investors. So here you go. Here's the whole the Midas list. Chris Dixon, Mickey Malka, Neil Shen, Richard Liu, Yeah, see, here you go. Andreessen Horowitz, Rabbit Capital, Sequoia China, 5Y Capital. Notice how these are all venture capital companies? Look, Alfred Lin, Sequoia, Hans Tung, GGV Capital. Like, none of these are fucking traders. These are all long tail investors. Neil Mehta, again, Peter Thiel. No, I'm sorry, CryptoFace is not anywhere in this top 100 list. Not even close. Although I bet you we could find... we could probably find a few names we would recognize in the Forbes top 100 wealthy list, which is different than the Midas list. Midas is specifically about investing. So let's go. Forbes billionaire, the richest people in the world. These are usually all entrepreneurs. Top of the list, obviously, Elon Musk at 219 billion. And as you go down, these are almost all entrepreneurs. Jeff Bezos, entrepreneur. Bernard Arnault family, France, fashion and retail. LVMH, so Louis Vuitton, okay? Bill Gates, Warren Buffett, Larry Page, Sergey Brin. These are all entrepreneurs. The top 50, I think, are pretty much all entrepreneurs. You start to get into a bit more of investments here. I think the Gautam Adani family, infrastructure and commodities, yeah, investors. Michael Bloomberg, investor in entertainment. Carlos Slim, entrepreneur and investor. Mark Zuckerberg down here as well. So these are almost all entrepreneurs or investors. Zhang Shansen, beverages and pharmaceuticals out of China. Champagne, hey, look, there it is. CZ, up at 19 right there. From Canada. I didn't know that, for cryptocurrency exchanges. So the first crypto name we see in the Forbes wealthy list is CZ. Yeah, most of these are entrepreneurs and early private equity investors. You could go through the whole list. You can do all your own due diligence, but yeah, there is nobody, no crypto face, not even close. You're talking about hundreds of billions of dollars though. Let's look. Number 119 is still at $15 billion of natural wealth there. And this is all from real estate investing. Yeah, okay, so hopefully that was fun for everybody. It was fun for me. Okay, let's take a look at a few more of your guys' thoughts and questions. Arcane Bear, CryptoFace proves his millions. Oh yeah, we're talking about billions though. That's a completely different ball game. Like an order of magnitude, right? Multiple orders of magnitude. So yeah. I feel like Studio Gala games that cover a wide variety of different play-to-earn games, the greatest potential. Sean, we like these kind of platform games as well. We're looking at one called Joyride. We're also looking at another called CTX that we're huge fans of. Myria. This platform game development makes a lot of sense, and we are also interested in those as well. No, the only reason I brought up CryptoFace is because I listened to one of his videos today and it just was basically useless information for me. I found nothing of value in that. So no jealousy here, more befuddlement actually would be the right one. We're talking about crypto day traders. Yeah, this is my point though. You don't see any day traders on the top of that list. I think the only trader that made it into the Forbes top 100 list was Jim Simmons. He absolutely knocked it out of the park with Renaissance and Medallion. And by the way, just for anyone that writes like rude comments, all I do is I just block you from ever being able to comment on the channel. Don't need your nonsense here. If BTC is going on a multi-year run, do you think that will ETH overtake it since it has been outperforming Bitcoin every bull run? Effectively, as you grow larger, it becomes harder to 10x, right? So going from 1 million to 10 million, or from 10 million to 100 million, or 100 million to 1 billion, all of these become orders of magnitude or multiple times more difficult to get to. So as Ethereum becomes bigger and bigger, as the market cap becomes bigger, it's going to slowly start to not outpace Bitcoin as well. Bitcoin's growth in its early days to where it is not what we're going to see in these later dates, just because it's so big. It's harder to get that much growth on something. So it's very unlikely. Where's Ethereum going? We haven't looked at Ethereum. We really try to use Bitcoin as our kind of guiding light here. Let's go to Ethereum and take a look. Okay, well, we'll show you why we were so bullish on Ethereum back when it was around $400, because probably one of the most important times in that. Way back here, this is the Ethereum we're looking at now. This little green, if you go back to August of 2020, this is why we were so bullish on Ethereum, was this nice widening Livermore pattern. So, I'm not as bullish on Ethereum as I am on Bitcoin in terms of like stability. This could be a reaccumulation channel with Ethereum though, although I'm not going to bet on it yet. In terms of like trying to increase positions for Ethereum, I'm actually more bullish on Avalanche than I am Ethereum, but that's been a personal choice since about June of 2021. So I just feel that there's more flavor there, but I think that they're going to coexist. So I don't think you're going to see like, oh, Avalanche is going to flip Ethereum, or I think they're going to learn how to coexist, and that you're going to see a market where the majority of participants have no idea that they're moving back and forth between chains. Actually, which brings us to a kind of a fun part of conversation too, is layer 0 is another fun thing we saw come up on our protocol. Here. I think it's these guys. No, it was on Twitter. I shared it the other day, layer 0. Well, it's in the private group under the news section. We'll go back to that at another date, but check out layer 0. I believe when we get to more adoption, most people will never be able to tell. Most people have been able to tell that they're using these chains in the background. So I'm still a big fan of Ethereum. Like, don't get me wrong. I think that the Ethereum community is going to continue, but what it looks like in the next 10 years, I'm not sure. There's a lot of developers, there's a lot of people that are diehards, but there are also a lot of diehard Solana fans and a lot of diehard Near and Avalanche fans. So I suspect it's very likely we're going to see a multi-chain future, and most people will not be able to tell once we get to that point. Do you still believe in ETH? That's a weird question. Do I believe in Ethereum? Well, I don't need to believe in Ethereum for it to exist, so what my belief is irrelevant. But do I believe in its ability to overcome the hurdles it has in front of it? I think Ethereum is probably like a Honda. You can keep adding parts to the Honda and it will do amazing. But if you build a different car, you're going to get different results. People are like, oh, Solana broke down. It's like, if you could drive a Ferrari and it's more likely to light on fire than your Honda, right? But it's also faster and better around corners than your Honda too. So every vehicle for transport of anything is going to differ. Now, Honda is super reliable, right? Nothing wrong with having a very reliable vehicle. I mean, I'm pretty sure Jeff Bezos said he drove a Honda for like the first 30 years of Amazon because of that. Oh, nice. Jesse Doe, great to see you here. I appreciate that. What do you think about Bitcoin layer 2s? I think it's adding bells and whistles to a tractor that doesn't need it. Effectively as well. This guy says total bias against ETH. Have no bias against anything. I just said it's very likely they'll all be here. People remind me of Kathy Newman when they do stuff like that. They're like, so what you're really trying to say is this total other shit that I in no way once came out of my mouth. Broken Trent Sink says, because of your personality, who you are, you should check the manifesto of Cult DAO. Oh, thanks. Cult DAO shared some stuff with us right at their Genesis event. And I just didn't pay attention because we're focused largely on play to earn right now. And once we get into a niche, we just stay there until we feel that we've kind of like worn it out, or we're trying to look for something else. But ultimately the play to earn sector, the video games, has brought a lot of fun and playfulness to the area of like, Well, I guess just tech in general, or any conversation. I spent a lot of my life researching conversations that most people were uncomfortable having. We were huge proponents of psychedelic mushrooms. Now it's like commonplace, or hey, this is actually really good at healing. Oh my God, so we've been saying that for decades. So the majority is usually quite a ways behind, whereas with the play to earn sector, we're finding this kind of nice niche where it's happening at the same time that we're interested in it. So we just stay focused on where it's profitable for us and where we think things are the most interesting. So any thoughts on Hex? I don't really have any thoughts on Hex. I had a great conversation with Richard about 6 months ago. We had a nice private hour-long chat. Super smart guy. I had a great time chatting with him. I think we both had fun. We should try to book a podcast. Again, my thesis, heads I win, tails I lose a little, is an adoption from asymmetry, which means that, look, there's no reason not to make small investments somewhere to find out what happens. And ultimately, had you made a small investment in Hex, it would have performed really well. And your risk was so limited. You know, put $1,000 or $10,000 in, whatever is a small amount of money for you, $100,000, $1 million, depending on who you are, $10 million. If you are okay with locking that capital up for 5 to 10 years to check your theme, then you should do it. So ultimately, my thoughts on Hex don't exist, A, because I don't have a technical background. Our team that was interested in tech, we fell in love with Avalanche, and we started to focus on the play to earn sector, so we're not devoting any attention to trying to figure out what's going on more so in the DeFi sector or with other DeFi protocols. But look, Richard's definitely a smart guy. Wouldn't bet against him. That's for sure. I try actually not to bet against people. Like, you're like, hey, would you bet against Vitalik? I'm like, no. Or Musk? No. I think the people that have the craziest ideas are the one you want to bet on. Just make sure you've limited how much you bet on so that if you are wrong, you're not in total ruin. So that's my thoughts on Hex. Interesting how they've reordered bond yields now back to fiat out of the inversion. What a coincidence. Layer 0, nice. I hold mainly AMC, GME, SHIB, Doge, Satima. Look, one of the fun things about Doge that was so fascinating was understanding that cultural adoption doesn't necessarily have to do with technology. It really has to do with people's interest. And again, don't bet against the mainstream too early. I think when you watch videos like The Big Short, seeing people who were early and had to sit on those positions for multiple years, you're called the crazy person for years to do that, right? So I don't think it's a bad thing, ultimately, to play on the mainstream's interest in things they don't understand. Like, look, currency is basically a meme to begin with. So why would we bet against that potential happening in real life, like happening within the digital space? It just makes sense. What is the best platform to trade crypto? Again, we don't think anybody should be trading, especially if you're new. A buy and hold and buy and buy and buy strategy will outperform every trader, usually in orders of magnitude. So just buy and you'll probably outperform everybody. So that makes it pretty simple. What is the safest bets in play to earn? Ooh, I'm not looking for safe bets. I'm looking for maximum risk. The reason being is because maximum risk means the most reward, if we're right. So I'm not looking for safe bets. I'm looking for far out, totally intangible ideas of what the future might hold. And that's where we make a bet. And that's why it's limited too. This is really important to understand in asymmetry, right? The upside is infinite and you can only lose so much. So if we're wrong, great, not that big of a deal. But if we're right, the returns are monumental. So we're not looking for safe. So it's probably not the easiest way to ask that. But the most exciting, we are early investors in Star Atlas. I still think that this idea is undervalued. And we're also big fans. Hey, baby, you want to answer the door? We're also really big fans of Solus, which is an AR metaverse play. Again, if you go to arcanebear.com and look under Wu Wei, you can see a lot of our kind of interest in the play to earn sector as it is today. So one or two more questions and then we're going to jump off here. Hey, baby, to change the water? Yeah. Awesome. Okay, so they're just dropping off some more water for our little condo here. Okay, there's two things I wanted to go over while we're here on the show. So let's do that now. Let's go back to the daily and let's take a look at some of the market sentiment in other areas. Boom. Okay. Okay. Not avalanche. We want to look at the DXY to begin. We're going to look at the dollar. The dollar's been moving up quite, but it's been moving up towards a multiple year downtrend, multi-decade downtrend actually. Let's see if I can get a little bit more values on this screen. I'm gonna have to show a weekly here just to get it all in. Monthly, come on now. Bam, there we go. Okay, so here's the dollar index chart back from 1968 to where we are today. We've been in pretty much a constant decline. Now, one of the big ideas is this an accumulation range, which we could be seeing right after a reaccumulation range? It's very possible. We could see a big spike up in the dollar based off all of this selling of bonds, mortgage-backed securities and treasuries that the Fed is planning on doing. Again, that seems very likely. The dollar is also what a lot of people are trying to run to. I have a friend living in Sri Lanka right now who says that there's no dollars in any of the ATMs or any of the banks, so you can no longer get dollars, period. And because of that, because the government has no dollars, they actually can't get oil or gas into the country at all. So there's basically no gas. People can't, and on an island like Sri Lanka, most of the hotels, most of the electricity comes from diesel generators. So they've basically run out of dollars and gas and now food, and there are largely riots in the streets. So this strengthening of the dollar is going to put such a huge tax on a lot of the third world countries, and you're going to see them blow up first, right? The US dollar and the United States is not going to be the place where you see these explosions first. It'll be the last, but it is happening already. And if we go over and we take a look at, let's go Sri Lankan rupee to US dollar. Sri Lanka temporarily suspends servicing US dollar for its debt payments. So again, this is the explosion happening, but in foreign countries where you're not privy to really seeing what's going on. So here you go. Look at the 5-year chart for the rupee in Sri Lanka from 2017. It's 65, okay, down to 60. You know, it's okay. It's a pretty big drop. It's a 15 to 20% drop. But look at the last month, and this is where things really start to go off the rails. They went from 0.005 cents per US dollar for a Sri Lankan rupee to dropping to 30. And this is the open market. This is the current exchange rate. You can't actually buy US dollars in Sri Lanka. So even though it says you can buy them for 300 effectively, let's switch it around so it makes a bit more sense in terms of the way we're going to have this. So effectively, here you go. Here's this massive amount. Let's get a bit more range here. Yeah, so March 2020, you were sitting at 200 Sri Lankan rupees for every dollar, and it is now at 320. But because there is no US dollars left in Sri Lanka, my friend says, okay, well, if you have crypto or if you have US dollars, it's trading at 450 Sri Lankan rupees to US dollars. So it's actually almost 55% to 60% higher on the black market exchange rate because there are 0 US dollars that you can get your hands on. You're going to see explosions like this in all of the other markets before you see it in the US dollar. So as the US dollar strengthens, you start to see a collapse of the currencies in places where they're just not as manageable to print money, like Sri Lanka or even Costa Rica. The Costa Rican colone, the CRC as well, another great way to look at this. Look at the amount of inflation we've seen since March, 560 to 670, 680. That's 30% in a year alone of purchasing power that's basically been totally lost to the average consumer. So these are not trivial things for many, many countries around the world. And Sri Lanka is a great example of that. So your question, let's go back to here, which I kind of went on a tangent, was, about bond yields and flat out inversion rates effectively. And the memes of currency. What was the last part of the question here? Okay. Yeah, so because of this, I think the US dollar is going to increase in its strength. Because, well, if you happen to be living in Sri Lanka, you're looking to get a hold of US dollars because, again, your rupee is losing so much value on a day-over-day basis. The US dollar looks like it's stable to some degree. So this could very well be a reaccumulation range as we see a degradation in many other countries around the world. You could see a spike up here for the US dollar, which, again, would be dramatic. And the biggest effects of that might not be seen in Bitcoin, but will be seen very likely in places like Sri Lanka. Let's see, let's just take a look around the world. Look at that, that inflation, boom, from February 25th, March 5th. This is a melt up, a total loss of currency power, 200 rupees on March 8th to 325 by April 11th, and it's not done yet. Let's take a look. Where else around the world can we see some of this? Let's look at the Japanese yen. Are we seeing any inflation? Even here, Japanese yen. Won or yen? Might be yen, I think. So from January 9th, 2021, we were sitting around 100, and now we're 125. It's a 30% decrease in their purchasing power for Japan to US dollars. And again, the petrodollar, the reason it's called that is because to close out any trade deals for oil, you have to do it in US dollars or rupees. Wow, if South African rand is actually holding it pretty strong. Let's go through, we'll take a look for fun. Let's take a look at the Russian ruble. Again here, oh look, wow, it's actually gone almost back to where it was. Okay, remember how everyone's like, oh my God, look at the Russian ruble performed so poorly. It's returned right back down to where it was. It's basically all of that it had lost, it has regained. And this is likely because they said, great, if you want to buy oil from us, it's only in ruble prices now, and giving the middle finger to the US economy. And they've effectively returned all of that loss. Again, you went from 77 to 135, back down to 80. That's wild. Yeah, no one talks about that. They only talked about how much the rupee had lost at that moment, but they forgot to talk about how much it had regained during all of this nonsense as well. Let's take a look at, let's give the Malaysian ringgit. Here's another country they're holding actually quite stable as well. So again, depending on what country you're in, you might not notice this right away, that even the Thai baht is somewhat stable here. That's a 15% increase over the last year or two. Let's take another, let's look at the Argentinian peso. Wow. Here you go. Argentinian peso in 2017 was 16 Argentinian pesos every US dollar. It is now at 120. That's a 10x decrease in your purchasing power since 2017. So within 5 years, you've lost 10 times your purchasing power from being in the Argentinian peso to being in the US dollar. So it's hugely important to understand why Bitcoin is so valuable during crisis moments, is because what other asset would you want to hold on to? You know, if we were to look at the Argentinian peso to US dollar, Bitcoin is on the biggest bull run you've ever seen. So again, remember, the US dollar will fail. We will inevitably get to a point where this thing can no longer sustain the madness of printing into oblivion, and we'll see a collapse. And what are people going to use then? It's likely something that the governments didn't create, in my opinion. Doom. When you look at the Forbes richest people, check their profile, a lot of people's wealth dramatically increased after 2020. There are a lot of people I know that had maybe only a few $1,000s that are now multi-millionaires because of the run we've just gone through. So many people's wealth changed dramatically. It was almost effectively, if your job was internet-based, you did extraordinarily well. If it was physically located somewhere, you did poorly. What's your take on commercial mining? Well, I think just general adoption. There's a lot of places like Costa Rica who could bode fairly well by having something to use their stored solar energy and all this excess energy that they're creating that's not being used at nighttime. It should go to do something, and Bitcoin mining is a pretty good way to do it, I would figure. So I think there's a positive impact to that, but it would seem governmental. I think what El Salvador is doing, if they're right, which I believe they are, they could be the next Dubai or Singapore of our generation. So it could bode very positively for the countries that are adopting it early enough. The US dollar is about to strengthen. Yes, currently it is strengthening. We just went over that. Just said it would look like it was strengthening, but against what? Against itself or against the Sri Lankan rupee? It'd be like, hey, it's not like a fair race, right? It'd be like if you were like, hey, Tio, we're going to put you in a 100-meter dash race against Usain Bolt. Usain Bolt's power is increasing versus yours. Like, well, I'm not a fucking runner. Of course. It's not a fair comparison. The US dollar's strength is increasing compared to what? The other dirty, useless fucking currency bullshit that governments have created? Oh, great. Great comparison. Hey, you're a murderer, but you're not like a multi-serial killer murderer. Like, you're doing great. It's not really like they're strengthening, you know? It's a strengthening in the face of it being already shit and having lost most of its value to date. Someone wrote Bitcoin is dumping right now, which means it's probably gone down like a few $100. I love that. Bitcoin is not dumping right now. So there's that over emotionality. And actually this looks beautiful. Okay, this is actually a little learning lesson here, it looks like. Let's use this. Clean up our screen a little bit. On the 1 hour, actually probably a bit more clear here too. Yes, beautiful, beautiful, beautiful learning lesson. Okay, we're often talking about the result versus effort. Here was the result, the price spread, and here was the effort that it had to take. Now we're going to look at this in two parts. We're going to look at it from individual supply candles. Notice this supply signature here on the 1 hour and its price spread here. And as we started to get closer to this bottom, noticed how the price spread, or I guess with a simpler, easier way to say it would be the depth of the body on the candle started to dissipate, even though the supply stayed relatively the same. This was that people were starting to buy more and more and more of it. And again, here what we're witnessing is if we're going to test right back into this $38,000 to $39,000 range, we could see this coming. I think we're going to probably try to push on the daily. Let's go back and see here. We'll get a nice clear picture. Yeah, we're going to want to try to push as low as 38.7 or maybe even 38.5 before I think we are done with filling this particular range. And again, you can see that there's such a massive amount of volume profile support here at this area, and we have not in any way punctured through that. In fact, we've bounced off of it pretty clearly every time. Now, again, we see these purple bars that are showing up within our Bollinger Band. They show a fair amount of supply that is coming in at that time. A lot of people, I've seen a few videos like, oh, we should be super worried about this, like this thing. See this purple bar here? This is worrying. Well, yeah, but it's also not. It's useless data, effectively. It just shows that there's a large amount of supply being sold onto the market. But here, it happened right before we went up, and then it happened again right before we went up. So a lot of the data, it could be a curse or a blessing. It really depends on the rest of the market. And currently, overall, the market, in my opinion, based off everything that I've seen here for my decades of being an investor and a trader, we're going up. And this little bit of supply test here is something we want. I would like to see something equivalent to what we had back here for a finalization, some type of supply signature that is as high as these previous supply signatures, because these are institutional market tests. Bang, bang, bang. See how they're almost unanimously across the board, very tall supply checks. This is what I would like to see one more of. Something like this come up. Test that, the price not to go below 35 to 39 and then come back above. So I'm still waiting for a big supply test. We haven't seen it yet, but I do suspect we're going to see that in the next few days. You'll see a big supply test. It'll be somewhat equivalent to the previous supply tests we had back in September, December, and February as well, and then that will probably be the finalization of this area before we go up. Go back through all the data we've been looking at here. Oh no, I wasn't sharing it. It's twice. Yeah, the reason I have a hard time sharing the screen, ladies and gentlemen, is because I don't have my regular studio setup where I just push a button. So I thought I pushed the button, but I didn't, apparently. No screen, no screen. Okay, let's go back. You can see screen now, so I'll talk about these purple bars. Okay. I apologize. Maybe I'll just start bringing some of the studio gear with me when I travel, so I don't make as many mistakes. Okay, see all these all these purple bars within our Bollinger Bands? These indicate a fairly large amount of supply coming onto the market. As you can see, it happens frequently within the daily time range. We've got one here, one here, one here. They happen all the time. But they've also happened right before we went up, because that supply test is over. And what's really interesting is you can see that happening now. We actually see a decrease in price spread, yet basically the equivalent amount of supply coming onto the market. So I believe, again, that these are largely bullish indicators before we go up. And there's a massive amount of support here on this VPVR range. I don't think we're going to be able to get through. And if we're lucky enough to get down to the $20,000 region for some reason, amazing. That's great. I suspect it'll be very, very short-lived. It'll probably be coincided with some type of cataclysmic event that would be hard to reconcile. Other than that, though, I believe that we're just going to go up afterwards like this. And there's many, many reasons that we've gone over for that as an indicator. I apologize for not opening the screen there. I'll try to bring my little buttons with me. Oh, this is a fun question. What do you think of the government stopping the use of stable coins? This is probably the most vulnerable area of this sector, is something like Tether or USDC. I think what's the most exciting is these algorithmic stable versions. If sadly Terra decided to call it UST, which again gives it some relation to the US dollar. If they had just called it the Terra dollar, they would, or the Terra buck, they would have been a hell of a lot better off. Anytime you're going to put US in there, you're infringing on like the United States branding rights, and this just sounds like an uber fucking bad idea. It should have called it a Luna buck. A Luna buck would have been a way better way to go. But effectively, the Luna dollar, or this algorithmic backed stablecoin, is a much better way to go. We have not seen too many of these done, but this is definitely a weak area. If they start to target stablecoin yielding markets based off the fact that it's based off the US dollar, like, hey, it's a USDT or USDC. They're using the branding rights of the US dollar. It sounds like a pretty bad branding move in terms of like property and infringement rights. So that's a vulnerable area. What that could do to the market, again, what the cataclysm is, it could be market, it could be global wide like the pandemic was, or it could be niche wide, just like in something like Terra, that could send the market spiraling. But again, I do not believe that would last very long. A lot of people though are in US dollars or the USDT form. I know a lot of traders, again. Most of the investors I know are all on the same boat we're on, which is basically get as many fucking assets in your hand as humanly possible before they absolutely destroy the currency, which they've done for generations before I got here. So yeah, but that's most of the investors that I'm friends with. I don't know too many people who trade and are, period, I guess. Supply and exchanges is historically low. Okay, we'll go back to this one as well. Let's go back to here. Okay, so we've been watching this chart pretty closely. We've been seeing a lot of bullish divergence here for the last few weeks, which, again, a little bit of a clearer picture. Here's the run up in the gray chart to $60,000. So the gray chart is Bitcoin's price. The orange chart is the supply of Bitcoin left. And as you can see, a bunch of supply came into the market, which sent us down to $30,000, but all of that was chewed up. And we've been consistently chewing up that supply since then. This to me indicates that there's an extraordinarily more advanced and sophisticated investor here that has a multi-decade time frame and hundreds of billions of dollars more than we had in 2017. And again, this is evidence to me that what we're witnessing is the reaccumulation, because we're seeing the supply disintegrate. We're not seeing more supply come into the market. It's going down and the price is staying stable. This is ultimately what leads to reaccumulation charts. So I'm with you there. We're going into a reaccumulation chart. Hey, No Name, good to see you back. It's been a while. Sorry about that, guys. I'm gonna start traveling with my little push button studio changer so that it's easier to pay attention to the screen. Check out the Iraqi Dinar. Okay, nice. Let's do that. Earlier we were looking at currencies. The Iraqi Dinar. Okay, this will be let's take a look at this. Go back to screen share, double check to make sure I'm doing this right. Okay, here you go. I guess the easiest thing to do would be just never show my face and only show the screens, hey? And then I don't have to actually do anything. Wow, look at that. January 2020, you saw about a 50% loss in the Iraqi dinar to the US dollar. Again, this is somewhat equivalent to the Sri Lankan rupee. Let's go with the Lebanese pound. I know they are having some troubles. Lebanese pound. How? It's just perfectly flat. There's something wrong there. Taiwan new dollar. Actually, it's actually quite strong there back in 2019 for Taiwan. Yeah, the Iraqi dinar was Indonesian rupee. Wow, the Indonesian rupee here has actually stayed pretty stable as well. That's surprising. Again, so it's not, these explosions are localized depending on the government and how they've handled their debt and their economy over the last few years too. So the Indonesian rupee versus the Sri Lankan rupee are dramatically different here, but still you can see that since 2017, we've seen a pretty much 30% inflation in almost every other currency versus the US dollar. Heavy dump coming today. I am looking, we've been talking about a supply test into this $40,000 range since we hit 46 grand. Until we see that larger volume signature and supply signature across the board here. Till we see one of these institutional signatures come in here for sell, bang, bang, bang. I don't think that this price test is done. And again, there's no reason to think we couldn't see a quick wick down to 35 and back up. But as you scroll out here, you start to look at more of the range that we're currently in. We got a big bump here. Now again, the majority of the buying and selling took place back at around $13,000, but most of the big players, the Kevin O'Leary's, the Elon Musk's that were buying billions of dollars, they did that in our first primary support ranges, right? And Luna buying billions of dollars, all within this primary support region. So even though there's a large amount of volume that had taken place, I bet most of these traders are already out of the market because they do not hold on. That's for sure. So I believe most of the smarter, larger institutional investors that do hold on are going to be the net beneficiaries of this primary support that we're seeing here. So yeah, no dump, but yeah, we could definitely come in a little lower to 36 to 35,000 on this VPVR, no problem. But we were looking for this $39,000 area, so we're super comfortable here. We wanted this. We suspected we need this. We need to fill this range a little bit more before getting over 50 grand, and then once we do that, I believe it's hellfire on the way up. But if we go down, we're even better technically. I mean, yay! Half price Bitcoin sounds like a fucking dream, and probably a very short-lived one. What about Russians trying to get to a gold standard? I don't think gold is the standard of our future. It's not accessible, it's not transparent, it's not easily transferable. I believe Bitcoin is the gold standard of our future. I've sat by that sentiment since 2017. Bitcoin is only speculative, nothing burger. Wow, sounds like someone knows nothing about finance. Decentraplant. This 21 million greater fools theory. Wow, very uneducated. Greater fools theory. Knows nothing about the technology. First mover advantage, speaking for it. ETH creates, 88 innovates, proof of work, crap supply. And yeah, there's a lot of things wrong in that sentiment. We've gotten past a large amount of the speculation in Bitcoin. yeah, we've gotten past speculation. I think it is good. It's here to stay. Calling it a nothing burger makes you look like the fool. Now, on the other point here, first mover advantage, Ethereum and ADA, you're talking about something totally different. These are not monies; these are contracts. Even if they are, let's say, deflationary by nature, well, so is Bitcoin. Anyone that loses a Bitcoin, it makes Bitcoin deflationary. That's literally how deflation works. How many people have lost how many, like 1 million of those Bitcoin don't even exist technically anymore. They're in Satoshi's wallet. So it's only 20 million Bitcoin, right? Because it may not ever hit the market. Bitcoin is inherently deflationary by the fact that if you lose it, it's fucking gone. So there's no advantage that Ethereum has over the idea that there's a lot of functionality for something like Ethereum or Avalanche or Solana in terms of adoption, right? Especially when you're dealing with the nature of a currency conversation. Yeah, and proof of work is super important. Prove that you've done anything useful. This is what your reputation is in the world, right? Like, proof of work or reputation is like fucking super valuable. Just saying that so blatantly is so silly. Even think about the basis from a conceptual format, let alone a technological format. Your proof of work, the work that you've done, is extraordinarily valuable. How do you prove any of the things, like your reputation score is fundamentally very valuable. Ultimately, probably undervalued in terms of how we manage conversations about identity. Chet Wanderlust says, I believe that Luna UST is a ticking time bomb of 45 billion. There's a non-zero chance of eating a death pile and crushing the markets. The bigger worry is the US debt. Not the debt not the market we're in. We're in such a small market compared to the US dollar debt. I think the debt to GDP ratio is like 60% in the United States right now. That's a much more worrying bubble than anything we're in. And if that collapses, again, we're going to be the net beneficiaries of that. Even if the gauges go fucking stupid haywire for a minute and it looks like Bitcoin goes down to 20 grand, it may not last long enough for you to get in or get out or to do anything, because when those things happen, it's going to be based off crisis, right? We have to remember that. So even if we see a price dip, it will be crisis. And where will you want to be? In an asset that you can't take with you, or one that you can travel across borders with in your brain? What does it do? Look, I don't need a tractor to have a laser pointer on the top of it. You're like, oh my God, but lasers are the newest technology. Why is there a tractor fucking laser beam attached to its forehead? Like a fucking shark with laser beams. Like, dude, you're overstepping the importance of just the basic function of moving fucking forward and being totally unstoppable. So Bitcoin does exactly what we needed to do, and that is the only use case it needs. We don't need to attach a laser beam to its head like Ethereum is doing to make it more valuable. It already does something that is extraordinarily valuable. I don't need to attach, laser beams or like underground lighting to my tractor. My tractor will bulldoze over top of that shit. Like, no need for this. Why are you a bear? Oh, this is a fun question. The reason why we think the bear is better suited is because bears are really the smartest. If you take it from an emblematic function, I think the majority of the people of the stock markets have totally lost the difference between a bull and a bear. What do bulls do? They run angrily at the first sign of red, confused and fucking stupid. That's a bull. What do bears do? Bears accumulate things for the forage and acquire as much of that asset they need as possible, because they know that the downtrend is effectively, or like the winter is coming. So what do? You accumulate as much as you can for the winter. That's what a bear does. That's actually the smartest thing to do in any investment thesis. So emblematically speaking, bulls are pretty fucking unintelligent animals that run at the first sign of red And bears, on the other hand, are like a pretty Gentile, family-oriented animal that always knows to accumulate for winter. It sounds way smarter. Anyway, so I think that largely that emblem of those two animals has been drastically misconstrued in the unintelligence of the trading markets. And the reason for the animal's choice of a bear and a bull has actually been totally lost. One of the ways we'll share this is the S&P 500. People constantly have gotten this one wrong. Let's take, here's the S&P 500 again on the bottom. We'll hide a little bit of, or Bitcoin's on the top. Here, at the top left, this was the 2001 bear market. Oh my God, and the 2008 bear market. You know the best thing to do in the bear market was fucking buy. So what should you do as a bear? You should accumulate. I think that it's actually a rather unintelligent, uncreative mindset that has like lifted up the bull, because the bull is the animal that gets it wrong. They run at the first sign of red, whereas the bear is what you want to do, which is accumulating during that red time. Because again, here, both the 2001 and the 2008 crisis, oh my God, the bear markets, had you bought during a bear market and accumulated, which is again, what bears do, you're fucking in the green, baby. So I think that this is a distinction that the markets have not made clearly, from lack of creativity, probably, or just a lack of understanding of what each of these animals are like in real life. I don't know. Just my thoughts there. So that's why we're the arcane bear. Chet says, I find it ironic that the crypto sector is entirely based off the idea of the demise of the dollar. It's not. It's based off the idea and the demise of the fact that, look, again, I don't know how many times I said this, but in 2012, 2013, when I first started to get super excited about Bitcoin, when we bought it at 90 and it went to 1,000, we bought again at 1,000, was because of the crisis. It is a banking collapse, not the dollar. It wasn't the Cyprus dollar that was collapsed. It was the government that then took all the money from the people that held that money in their banks. It's not the collapse of the dollar. It's the collapse of the faith and trust of the government system that enforces that there's anything valuable about that dollar. So it's not about the demise of the dollar. It's about the demise of the faith and trust in this useless paper, effectively. Yeah, I agree. We had a great conversation with Do Kwon on our channel a few months ago when Luna was back at about $10. He's not a dumb guy. That's a great point, Jesse Doe. I agree with you here. And backing with Bitcoin sounds like the smartest idea because it is the money of this ecosystem. I don't know much about crypto, but serious question. If the US can print endless, why can't they buy up and manipulate the market? They do. That's why the stock market is as high as it is today. And we've gone over this a bunch of times too, but we'll share one more time because I think this is a very valuable function or sequence of events to take a look at. So we like looking at this long-term chart of the S&P 500. We've done this multiple times where we've compared it against Bitcoin. But one of the things I like to do is compare the S&P 500 against the printing or the amount of printing that's taken place within the S&P 500, or sorry, within the US dollar. So here's the S&P 500 in yellow. You'll recognize at the bottom here the accumulation range that took place. And what we're going to do right now is we're going to compare it. Where's my compare button? Okay, here we go. No, metrics. I want compare. Indicator templates. Did I hide it on this one? Oh, I must have hidden it here. Nope, that's not it there. Dang, I can't seem to find... Why do I not have my comparison bar up here anymore? Okay, well, sadly, I must have taken the comparison bar off of hide. Yeah, indicators, metrics, strategies. Oh, yeah, I've hidden it somewhere and I cannot find it. I'm looking to compare it against the monetary supply. For those of you that have been here for a while, you'll know that when you do this, what you instinctively notice is that they basically go hand in hand. So the printing of the US dollar has actually effectively created the bull market in the S&P 500. I'll have to go back and fix that. I'm on my travel computer, so I don't have the same setup here as I normally do. Yeah, so the printing of the US dollar has manipulated all the markets. The reason why the housing market is so high is because of this printing. Pretty much all assets are as high as they are today because they've been printing dollars, and it needs to go somewhere, and it usually always goes into assets because the dollars are like a hot potato. Don't want to hold on to it for too long. Awesome. Well, 1 hour and 30 minutes today. That's the longest live stream I've done in a year. Give us a thumbs up if you like this content. Decided to stay a little bit of extra today because we're just kind of chilling out here doing some work while we're out in Cancun. So hopefully we'll be able to catch up again soon. We'll do another live video again tomorrow. I appreciate all your guys' support and feedback. Thumbs up, comment, like, subscribe, share with your friends and family. Remember to pretty much learn how to ignore a large group of people. They're usually wrong. Society is wrong about a lot of things. So one of the best things to do is being a contrarian. As long as you're good at it, it takes practice. Like, you can't be, just because you're disagreeing with the majority doesn't mean you're right either. That's an important part to understand. It's to the right of the ticker at the top left corner. Okay, let's go back. Let's see if I, oh, hey, nice find. They moved it. Thank you for pointing that out. They moved the compare button. Here's the monetary supply. We'll open it up. We'll go back to the S&P 500. We'll rock this open. And supply for the month. Okay. Okay, there you go. So here's the S&P 500. We're going to actually give it in yellow. And the monetary supply is in orange. So as you start to see here, these are, first off, look at the growth of the monetary supply from 2000 to where we are today, and the relationship of the growth of the market. The printing of dollars manipulates everything because it decreases the value of the dollar and it increases the value of the asset. This is effectively the illusion of the market price cycle that we are in right now. The only reason the market has gone up since 2008 and 2000 is due to this massive amount of monetary printing. And if you go to the Federal Reserve M2, let's see here. Yeah, oh, M2N, I wanted to go to SL, sorry. Yeah, here we go. This will be a fun chart. Okay, look at this massive amount of printing. Okay, so actually let's take a look at the 2S NS as well here. Yeah. Let's just look at the last from 2000, the data that we have. Okay, so here's 2000, right? Kind of where we started this. Bring these closer together. Okay, so here's the 2000. There's the monetary supply going up. And then look again here. If we zoom in even closer, this is fucking madness, by the way. Between February and where we are today, you see an increase of, what is this? From effectively 15,000 billions? Yes, from 15,000 billion, which I believe is 15 trillion, if my math is correct here, to 21 trillion. That's effectively just over $6 trillion of printing from the beginning of February to where we are today, which is why the assets have all appeared to go up. Whether it's housing, the S&P 500, every asset will increase in value as they degrade the value of the US dollar. Very, very important to understand this hot potato game that we are in right now. So thanks for pointing that out. Okay, anyways, thanks for pointing that out. They did move the comparison sign. Thanks for that one, guys. It used to be right over by my indicators, but they changed that somewhere in the last month. Anyways, we'll chat again soon. Thank you guys for sticking around for so long. Well, last question here. King Mini says, if the printing of more cash is the cause of huge market pumps, what will be the biggest indicator of the inevitable crash? No, that is the indicator of the crash. But the crash is very, very difficult to go through. There's a great book called The Dying of Money, or Dying of Money, which talks about inflationary cycles, whether you're in Argentina, whether you're in Zimbabwe, whether you're in the Weimar Republic, the same thing seems to happen. Over and over again. So I highly recommend reading that book if you want to understand. Ray Dalio just put out a good book too called The Changing of World Orders, which is a fascinating read and thought process to go through as well. I have not read that book, but I've seen some of his breakdowns and what he was talking about, and we agree with this sentiment. You're witnessing kind of longer stories than the average lifespan. You're a part of a story that's much longer than one human's life. So because of that, it's hard to find where you are within that area, because it's kind of disorienting. We're like, wait, this thing has been around and acting longer than I have. How do I use this data to make a sensible adjustment to what I need to do today? So because those things can extend far past our lifetime, it becomes a little bit harder to be confident. Anyways, thank you guys all for today. A lot of fun. An hour and a half. I've been ranting all day. Appreciate your guys' support, and we'll speak again soon.